Don't make this financial mistake. The secret. The rich don't want you to know everything you teached about money is wrong. If saving money was the key to wealth, why do most people who follow this advice remain stuck in the rat race? We've heard all our lives that we should study, get a good job, work hard, and save to ensure a prosperous future. But if this path really worked, everyone who followed this formula would be millionaires by now. However, what we see is exactly the opposite. People struggling to pay the bills, living paycheck to paycheck and seeing their money lose value every day. The problem is not just the money you earn, but what you do with it. The truth is that the rich follow a completely different set of rules than the middle class and working people follow. And today, you will discover this secret. Let's reveal why saving money can be a fatal mistake and what you should do to truly build wealth. If you want to understand how the rich make money multiply while most people struggle to keep what they have, stay with me until the end. This knowledge can change your life. The economy myth. Why is the advice to save money outdated? Imagine you have a time machine and can travel to the 1970s. You enter a middle-class home where a father is talking to his son about money. With a serious expression, he says, "Son, if you want to be successful in life, follow this advice. Study hard, get a secure job, work hard, save money, buy a house and invest in the stock market for your retirement." Now, imagine you could whisper in this kid's ear. In the future, banks will charge you fees for holding your own money. Real estate will be so expensive, you won't even be able to buy one, and the government will print trillions of dollars, making your savings less and less valuable. He would laugh in your face. But this is our reality today. The rules of the game have changed. What worked decades ago no longer works. What was once considered security is now a trap. If you continue to save money the traditional way, you will be dooming your financial future. And the rich know this. How inflation is stealing your money while you sleep. Have you noticed how things are getting more expensive? What used to cost $10 now costs $15 or $20 or even more. This is inflation. But what few people understand is that inflation is not just about rising prices, it's the devaluation of your money. The more money the government prints, the less purchasing power its economy has. Let's do a simple calculation. Imagine that you have $100,000 saved in your bank account. If annual inflation is 10%, this means that in 1 year your money will have lost $10,000 in value. In 5 years, even without spending a penny, you will have lost more than $40,000 of the purchasing power of your money. Now ask yourself, which bank pays you 10% interest per year to compensate for this loss? None. This means that each year your money is worth less. Keeping money in the bank ensures that you are slowly getting poorer. Meanwhile, the rich don't let money sit idle. They know that inflation is always eroding purchasing power and therefore they invest in assets that grow along with inflation. While most people see their salaries losing value, billionaires are protecting and multiplying their money. And the best part? You can do the same. Why depending on salary will never make you rich? Now think about the following situation. You work every day, follow all the rules, do your best and receive your salary at the end of the month. But before you even get your hands on that money, it is already committed. You pay taxes, bills, food, rent, transportation, and, if you have anything left over, put some into savings. But at the end of the month, everything seems to have disappeared. This happens because the system was designed to keep you dependent. Anyone who depends solely on a salary will never have financial security because they are exchanging time for money. If you stop working, your money stops coming in. Now look at how the rich operate. They don't just work for money, they make money work for them. Billionaires build assets that generate passive income. This means that while you work for your money, they invest in assets that pay them every month without them having to lift a finger. This is the difference between the middle class and the ultra-rich. The big lesson. The rich don't want you to know. The rich understand that idle money is dead money. They don't save money hoping it will multiply on its own. They put him to work. And now that you know this, you have two options. Keep doing what you've always done, saving money in a system that is stacked against you. Learn to play the money game the right way, investing, and building wealth. In the next segments, we will delve deeper into this strategy and show you where the rich put their money to protect it from inflation and multiply it quickly. If you want to get out of the rat race and build a truly secure financial life, stay with me. The following knowledge can transform your financial life forever. What do the rich do instead of save money? If keeping money in the bank is not the solution, what do the rich do differently? The answer is simple. They make money work for them. While most people accumulate money in bank accounts that yield nothing, millionaires and billionaires allocate their capital into assets that generate more wealth over time. The rich understand that there are two types of money. Dead money, the one that is sitting in the bank, losing value every year due to inflation. Active money, one that is invested and constantly growing. The difference between those who get rich and those who stagnate is precisely what each person does with the money they earn. Let's explore the main ways that the rich use to multiply their fortune. 1. Investing in real assets. The rich don't leave money idle. They invest in assets that grow over time. Some of the most common include real estate, houses, apartments, commercial buildings, and land. Real estate offers passive income through rent and long-term appreciation. Companies. Whether creating businesses or buying shares in promising companies, the rich increase their wealth through entrepreneurship. Shares and investment funds. They allow money to grow exponentially over the years, surpassing inflation. Cryptocurrencies and precious metals, alternatives to protect against currency devaluation and diversify investments. Now think, where have you been putting your money? If he's just sitting on the bench, you're wasting time and opportunities. 2. Creating passive income sources. Another secret of the rich is that they don't just depend on one source of income. They build multiple revenue streams so that money continues to come in, even when they are not working. Some of the top sources of passive income include property rentals. They provide a steady flow of money every month. Stock dividends, payments made by profitable companies to shareholders. Royalties and licensing, earnings from copyrights, patents, or intellectual property. Automated business, companies that generate money without the need for daily involvement from the owner. When you depend exclusively on your salary, you are always one step away from instability. But when you build passive income sources, your financial security increases dramatically. 3. Using other people's money to grow. The rich know that they don't just need to use their own money to invest. They use other people's money to accelerate its growth. This can happen in several ways, such as smart credit. Take loans to invest in profitable assets such as real estate and businesses. Strategic partnerships. Join forces with investors to carry out large projects. Investment funds. Invest money in projects financed by several people. Contrary to the traditional mindset that sees debt as something negative, the rich use good debts to increase your assets. This means that, instead of borrowing money to spend on consumer goods, they use that capital to acquire assets that generate even more money. 4. Understanding the tax game. Another factor that differentiates the rich from the middle class is knowledge about taxes. While most people pay high taxes on their income, billionaires structure their businesses and investments to reduce their tax burden. This is done through tax-free investments, such as certain types of funds and private pensions, companies and holdings, structures that make it possible to pay less taxes on profits and dividends. Tax benefits and incentives. Using tax credits and government incentives to reinvest money instead of paying it in taxes. Have you ever noticed that big companies pay almost no taxes? This doesn't happen by chance. They master the rules of the game and make the system work in their favor. 5. Thinking about the long term and avoiding financial fads. One of the most striking characteristics of the rich is their patience and discipline in investments. They do not chase quick money schemes, but focus on safe and scalable strategies to build wealth sustainably. The problem with most people is that they want to get rich overnight by investing in anything that looks promising at the moment. The rich, on the other hand, know that building wealth is a long-term game. Now that you know the main strategies used by the rich to multiply money, it's time to reflect. Where have you been placing your resources? If you want to get out of the rat race and really change your financial reality, start by applying these concepts to your daily life. Let's explore how anyone can start investing and create multiple sources of income, regardless of the salary you currently earn. Stay tuned, as this knowledge can transform your life forever. How anyone can start investing and create multiple sources of income. Now that we understand why keeping money in the bank is a mistake and what the rich do to multiply their wealth, an essential question arises. How can anyone start investing and create sources of passive income? Many people believe that investing is something complicated, reserved only for financial experts or those who already have a lot of money. But the truth is that anyone can start investing and create sources of passive income, regardless of their current financial situation. It all starts with a change of mindset and some strategic actions. 1. Start small, but start now. The biggest excuse for not investing is the belief that you need to have a lot of money. This is nothing more than a myth. Today, with just $50, you can start investing in shares, real estate funds, or even cryptocurrencies. The secret is in consistency. Small, regular investments over time can make a big impact. Real example. A person who invests just $200 per month in an asset with an average return of 10% per year will have around $400,000 in 30 years. Now imagine if you increase this value gradually. Practical step. Choose a small amount to start and invest every month. Even if it's $50 or $100, the most important thing is to create the habit. 2. Diversify your investments. Rich people don't put all their money in one place. They spread their investments to minimize risks and increase opportunities for gains. You can do the same. Actions. Participation in companies that grow over time. Real estate funds, FIIs, earn monthly rent without having to buy a physical property. Digital ventures. Creating an online business can be an excellent source of passive income. Cryptocurrencies and precious metals. Alternatives to protect assets from inflation. Education and training. Investing in knowledge is one of the best ways to increase your earning potential. 3. Build sources of passive income. Relying solely on salary is a big mistake. If you really want to have financial security, you need to build multiple sources of income. Some ways to get started include: create a YouTube channel or blog, monetize your content with ads, sponsorships, and affiliates. Sell digital products. Ebooks, online courses, and mentoring are excellent sources of income. Investing in dividends. Stocks and real estate funds pay periodic income. Create an automated business. Virtual stores, drop shipping, and recurring products generate money even without your constant presence. Avoid common mistakes that hinder financial growth. Many people never leave their place because they make mistakes that could have been avoided. Here are some of the most common. Wait for the perfect moment. There is no ideal time to start. Those who wait always end up being left behind. Investing without knowledge. Before investing money, study. Understand how assets work to avoid unnecessary losses. Living solely on your salary. If you don't create alternative sources of income, you are vulnerable to any crisis. Ignore inflation. If your money is not growing above inflation, it is losing value. 5. How to create a sustainable investment plan. To invest successfully, you need a clear plan. Here's a simple template anyone can follow. Set your financial IQ goals. How much do you want to earn? How soon? Create a budget. Set aside part of your income for investments. Choose suitable assets. Select investments compatible with your risk profile. Reinvest your profits. Whenever you receive dividends or income, reinvest to accelerate your growth. Maintain discipline. The secret of wealth lies in constancy and patience. Are you ready to change your financial life? Now that you know that keeping money in the bank is a mistake, and you know the strategies of the rich, what are you going to do from today? Wealth is not a destination, but a process. If you start now, within a few years you could see a big difference in your wealth. The choice is in your hands. Stay stuck with the old financial model, or start applying strategies that really work. In the next chapters, We will delve even deeper into how the rich use other people's money to accelerate their journey to wealth. Stay tuned, as this information could transform your financial life forever. How the rich use other people's money to get rich. Now that we understand the importance of investing and creating sources of income, a fundamental question arises: how to speed up this process and build wealth even more effectively? The rich know that their own money can be a limiting factor. Therefore, they use one of the most powerful secrets in the financial world: other people's money, DO. While most people think they need to save money to invest, billionaires know they can use smart strategies to leverage their wealth without needing large amounts up front. Let's explore how this works and how anyone can start applying this strategy. Today, 1. What is other people's money and how to use it to your advantage? The concept of other people's money, DO. It's simple. Instead of just using your own resources, you use third-party capital, banks, investors, partners, or even customers to make investments and create wealth. This can happen in several ways. Smart loans, financing an asset that generates more money than the interest on the loan. Investors, attract capital from partners who want to participate in your projects. Customer financing, create businesses where customers themselves finance their operation, such as crowdfunding or pre-sales. The main idea is to use external money to accelerate your ability to build wealth and multiply your earnings. 2. Using credit smartly. Most people fear credit because they see debt as something negative. But the rich know that they exist good debts and bad debts. Bad debts are those that take money out of your pocket, such as consumer loans or credit cards without planning. Good debts are those that put money in your pocket. Example: if you take out $500,000 in financing to buy a property that will generate $4,000 in monthly rent, and the installment is $3,000, you have a positive cash flow. In other words, your asset pays the debt and still has money left over to reinvest. Practical step: use credit to finance assets that generate returns. Never use credit to buy liabilities that just eat up your money. 3. Strategic partnerships. The secret of successful entrepreneurs. If you look at any great businessman, you will see that they did not build wealth alone. They attracted investors and partners to boost their businesses. Jeff Bezos raised millions in capital from investors to expand Amazon. Elon Musk used billions from investors to transform Tesla, SpaceX, and other companies into global giants. You can apply this strategy at your level, whether looking for partners to open a small business or convincing investors to finance your projects. The secret is to have a clear plan and demonstrate the potential for return. 4. Creating businesses where customers fund growth. Another way to use other people's money is by structuring business models where customers themselves pay for the operation. This can happen in several ways. Crowdfunding. Platforms like Kickstarter and Qatar's allow people to fund innovative ideas before they are even launched. Pre-sales. Companies sell products before manufacturing them, guaranteeing the money needed for production without needing their own capital. Subscriptions. Subscription-based business models ensure a predictable revenue stream and continuous growth. If you look at large companies, you will see that many use this strategy to grow without depending exclusively on their own money. 5. Investing with third-party money. Another great lesson from billionaires is that they rarely buy assets with their own money. Instead, they use third-party capital to make highly profitable investments. Real estate investment funds, FIIs. Instead of buying real estate alone, you can invest in FIIs, where several people finance large projects and everyone shares the profits. Stock market. Many entrepreneurs use stock market investors to raise capital and expand their businesses. Financial leverage. Experienced investors use derivatives and credit to maximize their gains. 6. How can you start applying this concept? You may be asking yourself, but how can I start using other people's money in my reality? Here are some practical steps. Build a good financial history. If you want to use credit for investments, you need to have a clean name and a good relationship with financial institutions. Learn to differentiate between good and bad debts. Before taking out any loan, ensure that it will be used to acquire a profitable asset. Look for partners or investors for solid projects. If you have a business or investment idea, learn how to present your plan in an attractive way to investors. Create products or services where customers finance the operation. Think about ways to generate revenue, even before you have high initial costs. Are you using the right strategy? The rich don't expect to have enough money to invest. They use other people's money strategically to build wealth quickly. The question is, are you going to keep hoping to make money, or are you going to learn to play this game the right way? In the next chapters, we'll explore more strategies that millionaires use to maintain and expand their wealth, ensuring that their money continues to grow from generation to generation. If you want to get out of the rat race and achieve financial independence, stay tuned, as the knowledge that follows could transform your life forever. How millionaires protect and multiply their wealth. Millionaires not only invest intelligently, but they also use strategies to protect your money against crises, taxes, and inflation. Let's explore the secrets that ensure the rich get richer while the majority continue to struggle financially. 1. Protecting wealth against inflation. The biggest threat to idle money is the inflation. To avoid this, millionaires invest in real assets, like real estate, gold, and cryptocurrencies. Invest in strong currencies, dollar, euro, and Swiss franc. Buy solid stocks, companies that maintain constant growth. 2. Reducing taxes with strategy. The rich minimize taxes by using companies and holdings, reduce taxes on profits. Tax incentives. They invest in strategic sectors. Tax residence. Move to countries with lower taxes. 3. Growing with compound interest. And reinvestments time is a great ally of money. The millionaires reinvest dividends. Stocks and real estate generate passive income. Invest in funds and ETFs. They grow without active management. Bet on startups. They look for companies with great potential. 4. Diversifying to avoid losses. The rich avoid risks by diversifying various sectors, technology, health, and energy. Global investments. Apply in different countries. Asset combination. Balance fixed income, shares, and real estate. 5. Protecting assets with insurance and funds. To ensure long-term financial security, millionaires use property insurance, protect properties and businesses, create family funds, preserve wealth for future generations, plan successions, avoid disputes and bureaucracy. Are you ready to grow and protect your money? Making money is not enough. It is essential to protect it, reinvest, and diversify. What will you do to apply these strategies? In the next chapters, we will see more techniques used by millionaires to continue growing, even in times of crisis. Stay tuned. The path to financial freedom. Now that you understand how millionaires protect and multiply their wealth, it's time to reflect. What will you do to transform your financial life? Many people spend their entire lives following an outdated financial model, working to earn money and saving what's left. But now you know that's not enough. True financial freedom requires strategy, intelligence, and action. 1. The rich man's plan to build a fortune. If there's one thing that sets millionaires apart from ordinary people, it's the fact that they have a clear plan. To go this route, you need invest smartly. Don't leave money sitting in the bank. Target it towards assets that grow over time. Create multiple sources of income. Don't just depend on the salary. Build businesses, invest in real estate, and create passive income streams. Using other people's money. Learn how to use credit and partnerships to accelerate your financial growth. Reduce taxes legally. Look for tax incentives and strategies that minimize your tax burden. Diversify and protect your assets. Avoid concentrated risks and have a long-term strategy. 2. The time to act is now. The biggest mistake that stops people from getting rich is postpone action. Many wait for the perfect moment, but the reality is that the right time never comes if you don't start. The difference between those who get rich and those who stagnate lies in daily decisions. Every choice you make about how to spend, invest, or learn directly influences your financial future. If you keep doing what you've always done, you'll get the same results. If you decide to apply the principles of the rich, you can change your reality. 3. What will be your next step? Now that you have access to this knowledge, there are two options before you. Ignore this information and continue on the same path, hoping that something will change on its own. Put these strategies into EY. Practice and build a solid and prosperous financial future. The choice is yours, but remember, time waits for no one. The sooner you start, the sooner you will see results. The financial game is being played now, and the rich already know the rules. The question is, will you remain a spectator, or will you join the winning team? The decision is in your hands. Get started today.